Look what happened. Is this crazy? Fight for you, for your family, and your future. Every single day I will be fighting for you. I believe the greatest political movement of all time. There's never been anything like this in this country and maybe beyond.
You are watching News Now in live on our continuous coverage of Trump's return as the President of the United States of America. I'm Krishnakumar. Dalal Street is catching the Trump wave. Sensex surging by over 900 points today, even as the results of the US presidential elections became clear during the day, with the markets reacting positively to the return of Donald Trump as the 47th President of the United States of America. This uptick is following a similar trend in the previous session when Sensex gained nearly 700 points, driven by optimism surrounding Trump's pro-business agenda, including a favorable corporate tax structure and reduced regulatory hurdles. Across the board, buying was strong. It was IT stocks, however, that stood out as the biggest beneficiaries of all. The Nifty IT index climbing 4%, with Persistent Systems leading with a 6% gain. Other IT giants like LTTS, TCS, LTI, Mindtree, Infosys, HCL Tech, all seeing impressive rises of 4 to 5%. A Trump victory is expected to strengthen the dollar, a positive for India's IT companies, and his proposed corporate tax cut to 15% for domestic production could further boost demand for IT services by easing budgetary constraints. However, despite that recent rally, the markets remain anywhere between 6.5% to 7% below their record highs early this year, even with a 3% rebound from the recent lows. So where are they headed from here on? Will we see a full comeback of the markets? To understand that, we have Nishchal Maheswari, stock markets expert, joining us. Nishchal, thank you so much for taking time out to be with us. Talk to us. A great bounce back by the Sensex and the Nifty today. Do you expect that upward momentum to continue come tomorrow morning?
Yeah, evening, Krishna. Thanks for having me here, and welcome to all your viewers. I do agree, basically. I think this momentum which has just started, I think at least for the foreseeable few days, you are going to see this kind of rally happening. Because there are 2 or 3 reasons for that. One is obviously the uncertainty around the US election goes away. So that verdict is out. The second thing is, I think Trump in his many speeches have said that he's going to be cutting interest rate, the corporate tax for the corporates from around 21% to 15%. That will put money into the hands of more corporates and thereafter increase the momentum in the economy. So I think these are the few reasons basically which you see Trump, which you see the market rally continuing.
Okay. But tell us, as a whole, does Trump presidency mean for a good thing for Indian markets, in the medium term going forward? He's going to be the President of the United States of America for another 4 years at least. In that context, where do you see the Indian markets, both in terms of short term and the medium term?
So that you have to be careful, basically. You have seen President Trump's tenure earlier also, basically, and there has been huge amount of uncertainty around that. The one thing basically which Trump will come back, and for him it's America, and I think that's the way basically he's going to drive his policies again. So one has to be cautious basically about the tariffs, which he has been highlighting, saying that across the world he's going to be actually increasing tariffs and maybe bring down corporate tax further. Now, there has been some instances like that in other countries where you have high tariffs, entry barriers basically, but no corporate taxes. So I think it's going to be more US-centric, and we have to see how those policies pan out. But one needs to be cautious basically, because I think in the first tenure, you had quite a bit of uncertainty around the policy front. And that used to create a lot of issues in the stock markets and the corporate world. So one need to be very cautious about that part.
Okay. Even as Trump returned, the talk of, will all that foreign investor money that flew out of India to China, will they also return? That's another big question in the mind of those watching the stock markets here in India.
So I think that was a different reason basically. It has nothing to do with whether Trump returns or whoever wins in the US. Nothing much of that basically. There were reasons for India basically because one, China was doing very well and was cheap. And the second thing was basically India, though was doing well basically, but it was very costly and frothy. So I think some amount of correction, around 8-9% correction has already happened in India. A good amount of money has been pulled out. So I think somewhere, given this uncertainty around the US is gone, so you are seeing once again risk assets being bought. And I think that's why you're seeing once again some renewed buying by the FIs also. Though I have not seen the numbers for today, but I'm very sure basically there has been some buying by FIs today in the Indian markets.
Okay, if you look at that rebound today, 900 points, several lakhs of crore rupees of market capitalization added for the day. In that, the IT pack standing out. The IT pack has had its fair share of issues in the recent past, from subdued earnings to so many other factors. Demand from America not being the most robust. What do you think a Trump presidency can do as far as India's IT sector is concerned, and consequently the IT stock pack?
Definitely. I think two things are going to happen. One is the interest rate cut, which we had seen the first of it happening in the US. Trump is a very, very big proponent of interest rate cut being continued. So I think that we will see, and that will help the US economy. Second thing, if it is a proposed tax cut also happens, then obviously that helps the corporates there to go out and spend more. And obviously one of the beneficiaries would be the IT sector. And that's why the Indian IT companies have done very well basically today. And I believe they will continue to do well. But I think you have to wait, because there's going to be like, if I remember it right, I think he's going to come into the presidency only in January, mid-Jan. So from then onwards, basically, one should be looking at it. But I'm quite positive. The outlook is positive basically as far as the Indian IT is concerned.
Okay, just to talk about the markets across the world, Wall Street, is meant to open higher today on the back of those results. That can have a cascading effect on markets across the world. Do you think, that the Indian markets too will get its a share of that pie?
Definitely. I think we have just gone ahead of in anticipation. I think when the Indian markets were closing, the US futures were almost 1,000 points up. So I think there is going to be a follow-up, definitely tomorrow also in India. I think in the next few days, this honeymoon period will definitely go on. And thereafter, I think policies and everything, I think markets are going to take a deeper look at what's really going to happen. But at least for the next few days, as I was saying earlier, you will going to see this strong market continued.
The strong markets will continue. What do you think will be the challenges from here on? Like we've had an extremely volatile period as far as India's stock markets are concerned. Even now, markets are down anywhere between 6.5% to 7% from their highs. For retail investors watching this, how do you think, let's talk about the stock market investors first. For retail stock market investors watching this broadcast, how do you think they should tread or trade in the days and weeks going forward?
So I think you should be cautious. I don't think basically that we are out of the woods as yet. Okay. After this initial exuberance, you might once again go back and see some amount of correction continue to happen. I think there may not be much deeper corrections, but I think there is going to be some time being spent around these levels. So more of a time correction than value correction. So one should be cautious basically, and you will get your chances to buy your stocks. Just identify and stay there. I think that's what it is. The second thing remains to be basically look at the current quarter earnings. I think there has been a good amount of disappointment. Look at your stocks basically, wherever you find strong earnings continued. I think those are the stocks you should be focused on. So be cautious in this market. There's no need to run. There is no running away in the market basically.
Okay, you've got to be cautious. So you're talking about the honeymoon period with this Trump victory. If I were to ask you, how long do you think this honeymoon period is going to last? How many days or rather weeks?
Maybe up to next midweek kind of thing, basically 2,
Okay.
3, 4 days. I think that's where it's going to happen. And thereafter, basically some earnings and all those things, the fundamentals in the market will catch up again.
The fundamentals in the markets will catch up again. The reason why I'm asking this, let's now shift focus is to other retail investors watching this, people investing in mutual funds and SIPs, and now there is all that talk of, fixed deposit rates going up, and with all the volatility in the markets, people are wondering, there's that question mark over mutual funds and the kind of returns that they can yield. So tell us from a mutual fund and a SIP investor's perspective, should they approach what is going on? Do you think it's a good time for lump sum investments into some mutual funds, or do you think they should just continue with their SIPs?
So I've been a strong proponent of SIPs only. I think SIPs continue to do very well, and even this volatility, you wouldn't have been really bothered about all this volatility because you were going very regularly and you were catching the lows and the highs. So I think that is what the benefit of an SIP is. But having said that, I think one can look at a few sectors, basically, if you want to really now put in your lump sum. So I think maybe IT and BFSI focused funds, one can look at that basically because with Trump being around, I think these two sectors, because of either interest rate cuts or more spending in the US economy, I think these two sectors will definitely benefit. So if you want to really put in your lump sum, don't go into the mid cap, small cap, but go into more sector specific funds. And there, I think these two sectors will benefit.
Talking about sectors, some sectors are meant to have it difficult if Trump were to come to power. Sectors, that are prone to higher tariffs that's possibly come from the US. Donald Trump talking about increasing tariffs on, pharmaceuticals and textiles and others. Do you think that, in that sense, the pharma pack will have it difficult in the way days going forward?
So pharma may not have much of a difficult time basically because you have to see them because these are all companies which have got their US FDA approvals basically before they are allowed to enter. So the more issues would be for more commodities kind of thing. Metals, one I definitely see out there. Some tariff increases likely to happen. Textiles, metals. I think these are two sectors basically which might attract higher tariffs. But having said that, I see that even in these cases, the earlier regime was not easy on those tariffs, and there has been very high tariffs out there. So metals, textiles, and chemicals. But pharma is different from chemicals. I'm saying more bulk chemical kind of things. So specialty and bulk chemicals. So these are three sectors one should be cautious about.
Okay, and there is always that big question of what's going to happen to the dollar with the Trump's return, all expecting the dollar to strengthen, and certainly not good news for the Indian rupee.
Yes, obviously, if I'm saying the money returns to US, obviously the dollar becomes stronger and all other currencies will become easier against the dollar. So definitely, I think rupee will suffer a bit. But I think what Trump really wants is a weakening dollar. And I think over a period of time, he is going to push Fed to cut interest rates more and more. Thereafter, bringing down interest rates and maybe a easier dollar or a weaker dollar kind of a thing, because that helps the US economy in the longer run. So they become more competitive basically in exports. So that's why I think it's only maybe temporary thing that dollar is strengthening. But eventually, I think Trump would want a weaker dollar.
All right, wouldn't want a weaker dollar. But one last thing before we let go of you. Talk to us in terms of, where do you see the markets headed, in the near term, Sensex and Nifty, if I were to ask you index-wise per se, any targets that you have in mind?
So I think for the year, we have already peaked out. I don't see that number getting taken out now in the remaining 1.5, 2 months, what we have left of the current calendar year. But financial year, there is a possibility that the previous high gets taken out. But as I was telling you earlier, I think we have to consolidate around these levels for a month or two, and thereafter we are definitely going to see higher levels. There is no doubt about that.
All right, we will leave it at that. Nishchal Maheswari, thank you so much for taking time out to be with us over here on this broadcast and helping us understand how the markets are going to go from here on.